Hey there, savvy decoders. Let's take a peek into the financial and political crystal ball to see how this week's news might affect you over the next year. Grab your favorite beverage, because we're about to break down the chaos into simple, fun, and actionable insights. Let's dive in. The Fed's interest rate roller coaster. What's the news? The Federal Reserve is keeping interest rates high to combat inflation, but there's chatter about potential rate cuts later in 2025. Think of the Fed as the DJ at a party. They're controlling the volume, in this case, the cost of borrowing. Scenario 1. Rates stay high all year. Borrowing remains expensive. Credit cards, mortgages, and car loans continue to be costly, but savers enjoy better returns on savings accounts and treasury bonds. Winners: savers, banks, and anyone sitting on cash. Losers: borrowers and small businesses needing loans. Scenario 2. Rates drop by mid-2025. Borrowing becomes cheaper, potentially boosting the housing market and stock prices. However, savers might see lower returns. Winners: borrowers, home buyers, and growth stocks. Losers: people relying on high returns from savings accounts. How to profit. Today, lock in high-yield savings accounts or treasury bonds now. They're offering some of the best returns in decades. For the future, if rates drop, watch for housing market deals or invest in growth stocks like tech companies that thrive when borrowing gets cheaper. Energy prices heating up. What's the news? Electricity bills are soaring due to higher energy demand and infrastructure costs. However, government incentives for renewable energy like solar panels and battery storage are making waves. Scenario 1. Fossil fuels dominate. Traditional energy companies receive regulatory support and oil and gas prices remain steady or climb. Winners: oil and gas investors, utility companies. Losers: households with higher bills, renewable energy firms with less support. Scenario 2. Renewables take the lead. Green energy becomes cheaper and more competitive thanks to government incentives like tax rebates for solar and wind projects. Winners: renewable energy investors, homeowners with solar panels. Losers: fossil fuel companies and investors in older energy infrastructure. How to profit. Go green. Install solar panels or upgrade to energy-efficient appliances. Government rebates can cover up to 30%. Invest smart. Consider ETFs like XLE for traditional energy or ICLN for renewable energy. Playing both sides of the energy game isn't a bad idea. Housing market drama. What's the news? The housing market is tighter than a jar lid your dad won't help you open. Mortgage rates are high, thanks Fed, inventory is low, and rents are climbing. Basically, whether you're buying or renting, it's tough out there. Scenario 1. Rates stay high, housing stays tight. Housing prices hold steady or dip slightly, but rents continue climbing due to demand. Winners: landlords, homeowners with lots of equity. Losers: renters and first-time buyers. Scenario 2. Rates drop, buyers return. Lower mortgage rates could bring more buyers back into the market, increasing competition and boosting prices. Winners: home sellers, real estate agents. Losers: renters may still struggle as buying remains expensive in key markets. How to profit. For renters, negotiate your lease or look for deals in less competitive areas. For buyers, wait for rates to drop or consider fixer-uppers. Renovations can pay off big in tight markets. For investors, look at REITs or real estate investment trusts for exposure to rental properties without the hassle of being a landlord. AI and automation taking over. What's the news? AI and automation are advancing faster than you can say ChatGPT. Companies are investing big in artificial intelligence to cut costs and increase efficiency, but this comes with job disruptions. Scenario 1. AI creates new industries. AI isn't just replacing jobs, it's creating new ones in fields like data science, cybersecurity, and AI ethics. Winners: tech companies, workers who upskill for AI-driven roles. Losers: workers in repetitive roles that are easily automated. Scenario 2. Slow AI rollout. Industries adopt AI more cautiously, giving workers time to adapt and reducing large-scale disruption. Winners: Companies hesitant to automate too quickly, workers in stable roles, losers. AI developers who rely on fast adoption. How to profit. Invest in AI stocks. Consider companies like NVIDIA, which makes chips for AI, or AI-focused ETFs like BOTs. Upskill yourself. Learn AI-related skills or move into fields like green energy, healthcare, or skilled trades, industries unlikely to be replaced by AI anytime soon. Trade wars reloaded. What's the news? Tariffs are back in the headlines, with the U.S. introducing new taxes on imports, particularly from China. This could shake up supply chains and prices. Scenario 1. Domestic industries win. Tariffs help U.S.-based companies by making imports more expensive and boosting local demand. Winners. Domestic manufacturers, industries like steel and textiles. Losers. Consumers facing higher prices for imported goods. Scenario 2. Retaliation hits hard. Other countries impose their own tariffs on U.S. exports, making it harder for American companies to sell overseas. Winners. Domestic-focused companies not reliant on exports. Losers. Export-heavy industries like agriculture, tech, and manufacturing. How to profit. Buy American. Invest in U.S. companies that benefit from tariff protection. Look at domestic manufacturing stocks or ETFs focused on the U.S. economy. Shop smart. Cut costs in your personal budget by prioritizing locally sourced goods whenever possible to avoid inflated import prices. Wrapping it all up, how this week's news sets the stage for 2025. This week's headlines: rising rates, energy costs, housing challenges, AI innovation, and trade shifts are more than just news. They're blueprints for what's coming next. Here's how to keep ahead of the game. For savers, lock in high-yield accounts now. These won't last forever if rates drop in 2025. For energy watchers, balance your bets. Short-term profits from oil and gas, but long-term gains from green energy investments. For home seekers and investors, stay patient and look for undervalued opportunities in housing markets or REITs. For workers and investors in AI, upskill for the new economy and consider AI-related investments. For everyone affected by trade wars, think local, invest in U.S. companies with limited export exposure, and support domestic products to ease the burden of higher costs. A quick reminder, this is not financial advice. Everyone's situation is unique, and you should always do your own research or consult a financial professional before making investment decisions. The economy is full of challenges, but with the right strategies, it's also full of opportunities. Plan now, stay flexible, and 2025 might just be your best year yet. For more updates, tips, and decoding the chaos, stay tuned to Capital Decoder News. Let's keep finding ways to turn headlines into opportunities.